we don't see any dramatic change in distress, whether it be equity or debt. This year we think perhaps there'll be more loan sales taking place in 2012. But those lenders that took a more measured approach, some say kicking the can down the road, if you will, have actually benefited because the prices have appreciated and the potential losses have lessened as a result of that delay, if you will. And given that fundamentals are viewed this year in 2012 to not at a huge rate of growth, but certainly we're not projecting any sorts of declines in the fundamentals, but perhaps a slow growth in the fundamentals. That should bode well for those investors that continue to work with their borrowers on assets that are, let's call it, somewhat distressed. So 2012 should be a good year for lending across all property types and amongst all different types of lenders. We think the GSEs will actually put more money out this year than they did last, and last year was a record year for Freddie and Fannie specifically, as well as FHA HUD. Life insurance companies find commercial mortgages very compelling given the risk-adjusted returns available for this asset class. So our view is that life insurance companies will put out more money in 2012 than they did in 2011. And finally, banks. Banks have a very low cost of funds, and they've got to make loans to make money. So our view is the banks will, the healthy banks that is, do more business this year than last. Moving into 2012, we saw somewhat of a flattening of investment sale activity, largely due to what transpired in Europe in August of last year and the effect that that had on the CMBS market. However, despite that flattening, if you will, we still have projections of growth in 2012, given the huge amount of capital coming in from pension funds, from foreign investors, and the like, seeking the returns available in commercial real estate. So on a risk-adjusted basis, commercial real estate still presents a very compelling story as far as investment across all asset classes. And so we are very optimistic and bullish on the market continuing to perform well, and investment sale and debt activity to continue to rise this year. But it might be more of a back-end loaded year than a front-end loaded year given that flattening I just mentioned.